This is position reviews for December 20th, 2016. It's Tuesday. And I'll start as usual with this NDX January butterfly. Today, NASDAQ only rallied about a third of a percent, maybe about 40 basis points. And yeah, we lost maybe $300 or so. I think it was down to 2,700 yesterday. So and it's really getting on the edge of the upside target, and I'm not liking this theta ratio quite so much. So yesterday morning at the open, I'm going to be watching the index very closely, and if it continues much higher or breaks all-time highs, I will most likely roll this call one more time and give it a little bit of a chance to cooperate for a few more days, maybe a week, but it would really, really have to cooperate nicely. I don't want to fight this thing anymore. It's been a losing trade since day one, and so I'm happy that I was able to squeeze about 2,500 out of this to this point. So just take the loss and move on. There's gonna be a better opportunity and a trade that works better. So I'm not gonna stay with this just in hopes to try to get this back to break even. That's a fallacy to try to always get your things back to break even. Not a good trading strategy. So yeah, so I might roll this call up one more time and build this little structure, and then that's it. And after that, it'll just be closing to get out of this thing. So that is January, February. Looks like this. And make sure none of these are checked. Yep. And so yeah, right, pretty much dead bang on the top of this graph. Pretty much delta neutral, very, very flat. This one made a little money to basically break even, offset the loss in January, so that's okay. And yeah, so absolutely nothing to do there. And February has 58 days remaining, so in no hurry to do anything on this. The main thing I'm watching are these the furthest away puts, and just see when I might start closing those, but I have not put in an order or taken any action on that yet. Russell today rallied much higher than the other two indices. It was up almost a percent at one point. I think it finished up about 0.8, about 80 basis points. And it's definitely pushing the upside of this. And in fact, I stepped away. Sorry, that was checked. But yeah, I stepped away in the afternoon, was distracted, and didn't really watch this into the close. In hindsight now, I wish I absolutely should have done something. Absolutely should have done something. So I really am uncomfortable with this delta theta ratio, and we're way too far up. It's starting to slide down this right side. Um, it is below the all-time high, so maybe it stops. But if you heard me earlier, I don't give a lot of credence to those sorts of technical things. But what causes the problem on those things in a situation like this for me is I know that, hey, I've got these short calls, they're a decaying asset, so the incentive is to hold them, and just the longer I hold them, the more they decay. So that's great. So I want to find an excuse to hold them, really, because I know that there's the potential that I can make money. And so then you have that incentive that I want to find a reason to hold these and stay in this position. Plus, if I close it, that's taking a loss, and most people don't want to do that. I'm guilty of that as well, although I've pretty much eliminated that from my psychology, but that's definitely was a strong component at the beginning of my trading career. And so what happens, as I was saying, is you have an incentive or a predisposition to want to do a certain action, and then you go look at the chart, and again, I won't get into a whole technical analysis or chart reading thing, but pretty much you can find whatever you want in a chart to justify whatever action you want to take. So in this instance, if I say, oh, I'm really starting to lean shorter than I want to be, I don't like this position, but I've got these calls. Hey, let's go look at the chart. Oh look, here's the all-time high here at 92, and we closed at 85. So it's below the all-time high. So I'll just wait until it breaks the all-time high. And there's some validity to that. I mean, that's not a terrible way to trade. But in hindsight, I wish I had taken some action a little bit lower down and staved off some of these losses. Which again, I think if you just notice, it was 500 something earlier, and now it's 643. That's the after hours thing. So cannot trust these after hour. But most of the afternoon, I think it was close to about a $500 loss. So this position, for my position to work out, I really, really need Russell to retreat back down in the middle of this range. And if it did, I would just, close this strangle and start peeling pieces off. Because once again, this Russell position has just been a fight since the beginning. And speaking of Russell, interestingly, I looked at my year-to-date P&L for all the instruments I've traded, and was positive, some barely positive, but I was positive on every single instrument that I trade except for Russell, which accounts for about a $20,000 loss. So I would have made another $20,000 this year if I had just not traded Russell at all. And that's been pretty consistent since I've been doing this for the last 4 or 5 years. Russell has always been my worst instrument, and yet I find myself putting capital back to play in it, and I think I should just finally give up and just not even trade it anymore unless I have a very, very specific, well-defined strategy and a very clearly defined exit point, maybe just a directional type trade, because the neutral things just have not been working, at least the way I manage them. I've not done well with Russell, so I think that is either going to be completely eliminated or trade in very, very small percentage of my capital. So that's an aside. But yeah, so how do I manage it at this point? Pretty much like the NDX. Any sort of rally in the morning, something's got to go. This 1390 call has got to go. I either just completely take it off. Maybe I'll take it off as part of the strangle. Oh, see that? Look at that delta theta ratio. I mean, that's still really, really short. I really don't want to be that short. So maybe I just close this 1390 entirely. That would put me into something that looks like that, which is pretty much flipping the cards over and going from overly short to long, which there are worse things to do. So that's one possibility. Another possibility is to close one of these verticals or close both of them. So I'll decide. But when again, I could potentially roll up this 1390 to 1400 or 1410 and try to wait another couple of weeks, because there are still 30 days. I mean, there's still a decent amount of time in a month. So I mean, this, and like I said, some people would just be initiating a position at this time. But it's getting late in the year. This has just been a struggle, so I don't really feel like fighting this too much. I'll think about it. I'll think about rolling this one more time. But if Russell breaks, if it just gaps up and breaks the highs in the first few minutes, I think I'm just going to close this, because I don't want to keep fighting it, because who the hell knows how far this can go. And this is the problem with rally. I mean, most people, obviously, you're a complete novice who doesn't even watch the market and just has stuff in their 401k. They want to see all-time highs day after day. They love this. Other people who just buy things, other traders, even traders who just trade long only, well, they're typically happy. But for anyone who tries to trade both sides of the market or trades a neutral type strategy, these prolonged rallies are not much fun. It gets very tiring just to have it move one direction over and over and over, pretty much week after week. I mean, we need some two-sided action. In SPX, let's look at January. Make sure everything is unchecked. So SPX January, this isn't looking so bad. So this, this 10 to 1, even better than that. Delta theta, don't mind being there, pretty close to the top of the peak. I've got a little bit of distance up to my short calls at 2300. So this isn't looking too terrible. I feel much more comfortable holding this position. So this will be fun. So since I'm recording this, I feel much more comfortable about SPX than I do NASDAQ or Russell, which in the history of my experience, although you get this self-selecting thing, usually it's not uncommon that the position you feel most comfortable with turns out to be a real nightmare, and the ones that make you nervous and keep you up at night, sometimes those just turn out to be absolute glorious winners. So this will be interesting to see, but feeling pretty good about SPX. I like where this one's positioned. NASDAQ and Russell are pushing the upside and making me a little more nervous. Again, I have this strangle. I've got the order working for $15. Don't know if it's actually going to get there, but I'm keeping an eye on it. If this shoots up much higher, maybe 22.5, 25, just picking arbitrary round numbers. At some point, I might just close that just to reduce the risk on this thing and get it into a more well-defined structure. February, nothing to do. Same thing. I think I've got these orders in. Do we have orders in on February? No. So yeah, we don't have the orders in for this spread yet. It's getting there. This 10 lot is it's 65 cents, and I'll just put it in now. So I'll just put it in for 45 cents. Good to cancel. It can just sit there. And so it'll just sit there until they decide they want to take it. And usually, so in the same situation, this 2100, 2075, this spread here, this 10 lot. Same thing, I've had this order working at 45 cents. And several times today, it was the mark over here was telling me it was at 45 cents, but it never filled. So if it didn't fill, then it either actually did not trade there, or the theoretical price was wrong, or there was more orders in front of me, and it never got to the point where it filled my orders. So, and I've even, I might see it where it is marking at 40 cents or 35 cents and still doesn't fill. So, like I've said before, the bid-ask spreads are fairly wide on these products, and the electronic platform isn't 100% accurate. Telling you what the price is close, but it's not completely accurate. And so, if you ever want to simulate trades and do a little back testing type thing, take that into account if you're working on these products. What you see on the platform may not be, and sometimes it can be off by quite a bit. It could be 20-25 cents difference than this, where you would actually be filled. And so always take that into account if you want to do some sort of those, if you want to be more stringent and try to draw conclusions from your back test. Take into account that what the platform shows you on pricing may not be reality. And I will know when this thing actually is worth 45 cents when I hear my platform give a ding 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 and I go check my messages and see that it filled. Until then, it just sits here and bakes away. So that is all the positions that I currently have on. Again, I'm not really looking to open any new positions. Volatility is still extremely low. Maybe we'll get some retracement and back off from these highs, and volatility will shoot up a little bit, and I'll look to put some new positions on. But I'm happy to close down, take profits, have more cash sitting in the account, and start off the year with more capital to put into play, and wait for a better opportunity. As there's no reason to, like I said yesterday, there's no reason to chase the market here. I certainly don't feel like getting super long, and I certainly don't feel like selling a lot of puts with volatility down here, and I certainly don't feel like getting super short. I mean, I think the market's due for a correction, but heck, what do I know? So I certainly don't feel like getting outright short. There's, I don't see anything that would lead me that direction. So since there's not a strong inclination to do anything, and also similarly, I don't really feel like throwing a bunch of neutral butterflies on, because I think this thing could move. So not really feeling a reason to initiate any new capital. So I will bide my time, wait for better opportunities. Maybe, I will show you briefly gold. I haven't shown you gold in a couple of days. And actually, I tell you what I'm going to do is record another whole video to walk through this entire gold position. And we'll go through the simulated trades. I'll go back through my statement history and put them out and walk through exactly how this happened. Because this one is pretty fascinating. Because I started out with a bullish scenario, a thesis, that 1200 would hold as support and we would rally back up. And you can see that absolutely has not happened, and as it rallied down below 1130 today. And again, this P&L is not completely accurate because I've had some rolls and other things. But I do believe it is up money. So despite the fact that I started with a bullish thesis, and this thing has just been almost relentlessly selling off week after week here for the last couple of months, that we've been able to eke out a little bit of profit of this, playing both sides of it. And so yeah, I will walk through, but right now, obviously, very much neutral in the middle of this range. We've got a short call up here at 1180, and some short puts at 1100, and we're almost right smack dab in the middle of that range. So as long as it oscillates back and forth in the middle, fantastic for me. If it starts to move one way or another, like Russell or NASDAQ pushing the upside, I'll be forced to do something. More likely, what's happening is it continues to sell off. And if that happens, then I'll be closing these and getting rid of these puts, take the loss on those, or maybe a little bit at break even. And then maybe I can, if it stays down and time passes, maybe these calls can decay a little bit more, and I can make back more money on these calls as they decay that I lost on the puts, and eventually get this position to eke out a little bit more money. But one last point I was going to make about gold, but before I record the other video, is what's been nice about gold, in contrast to the equity indices, where you get a lot of juice on the puts and almost nothing on the calls because there's a put skew. And if you're not familiar with that concept, I might even record another video to explain that. But essentially, because people have more fear about the stocks crashing, because most like 90 whatever plus percent of people make money on the way up and lose money on the way down. Since there's that fear of the market going down, that's why puts are expensive and people buy them for insurance. They buy puts for downside insurance, and because lots of people are buying that insurance, that obviously demand creates a higher price, and so there's more juice or premium in the puts than there is in the calls. And sometimes in some stocks that can reverse. A few years ago when Apple was just a crazy momentum stock and some of those other momentum stocks, sometimes the calls will actually show more premium than the put side, just because it's been relentlessly people are buying calls to chase the rally. Well, in contrast to the equities, what's been nice about this gold position, and also very nice about crude oil, which I traded for a few years, but now is just moving around too much for my more neutral anti-trending strategies. And crude has been trading in a semblance of a range, but it's about a 20 to 25% range, so it's really, really big moves. But what's nice about oil and gold is there's usually quite a bit of juice on both sides, on the call side and the put side. So you can play it for either direction, and you can structure these neutral positions, condors and strangles and straddles and whatnot. And you can get some good premium on both sides, and that really does help in situations like this. It's been very evident after pretty decisive rally down and just a little bit of standing still, and the money just comes whooshing in pretty quickly. Where in contrast with equities, as it just rallies up and up and up, and the option prices decline and volatility drops and the calls dry up, and you're trying to roll call. If you have to roll calls, you're not really able to roll very far, and there's just not much to do, and you can't actually sell more calls and get a lot of premium back in the trade. So this rallies on equities, it just stinks as an option seller and as a neutral trader. Really do not a fan of continued long rallies in the equity indices. But bigger directional moves in the futures markets have been great. Bonds also has performed really well for me this year. So that's a gold position. I will walk through that in more detail from start to finish in a separate video, and that will cover everything for today. We shall see how tomorrow morning goes. I have a feeling that I'm going to probably have to do something in the first half hour on Russell and NASDAQ, and just either take one more roll or just bite the bullet and close them out, and close those down for losses, and start looking at February and March and moving on to other bigger and better things. So thank you very much for watching. We will see you tomorrow.